A lot of companies say that they run key account management, but very few actually do. In today's episode, Mark Davies and I go deep into what separates real key account management from the version that most teams practice. Mark has spent decades inside global B2B organizations, consulting, teaching, and helping teams rebuild their approach to managing strategic customers. We look at how to build an offer that customers care about, what strong key account management teams do differently, and why organizations drift back into old habits. Mark also talks through the common failure points he sees when an account plan stalls or when we're not doing key account management right, and what teams can do to reset. If you work with large accounts or if you want to lead them better, this is a sharp, grounded look at what makes key account management work. Let's get started with Mark Davies. If you're an account manager, you already know this. You're the one keeping the business running. You own the client relationships, drive the revenue, and solve the tough problems for your customers. But here's the challenge. Most companies don't give account managers the training or recognition they deserve. That's what you'll get here on the Account Management Secrets podcast. I'm Alex Raymond, and after working with thousands of account managers, I know what separates the best from the rest. In this show, we cover exactly what you need to succeed, handling tough client conversations, driving renewals and upsells with confidence, and proving your value every single day. There's no fluff, no outdated sales tactics, just real practical strategies you can use right now to grow your accounts and build a successful career. If that sounds like what you've been looking for, hit subscribe and let's get into it. Hey, Mark, great to see you. Thanks for being here.
Thanks for inviting me, Alex. Looking forward to it.
Yeah, same here. I'm also looking forward to jumping in. I love it when we have key account management focused episodes. Now, there's a very interesting statistic that you shared with me. It comes from Gartner. And the statistic basically says 80% of companies that try to roll out key account management programs wind up redoing these every few years because they aren't able to get the results they're looking for. So this is a huge source of frustration for companies. What I want to know is what's going on? What is behind this? Why are we experiencing an 80% failure rate here?
Yeah, so I think one of the areas I look at when I'm working with companies is, we get, for example, you work with either an open program and you get multiple companies coming in and we're training individual typically key account managers, or you work with a bespoke in-house program and the key account managers understand what they're going through to build a plan, a strategy around a customer. They understand it, they get it. But when they go back to their day-to-day, it's a cold, wet, rainy day in London or Colorado or wherever they are, the rest of the business isn't necessarily aligned to be working that way. So, and I think what happens is it's this kind of lack of understanding that key account management is a different business model. It needs investment, and leadership need to change the way that they do things. So I focus on that quite a lot with companies instead of just training people. I try and get them to say, you're building an organizational capability here. It's a different way of doing things.
Well, we're basically playing a different game, right? And so part of playing the different game is the timelines that people are expecting. So one of the things I've heard a lot of in the past is people will have frustration about an account management program or a CAM program because, like you were saying, hey, what's happening this quarter? What's happening this year? The time frame for a lot of other parts of the business can be shorter. Now, key account management is a long game. We know that if you want to get out there and you want to grow a customer by a factor of 10 or a factor of 50 or a factor of 100, it's not going to be an overnight thing. It's totally doable, but it's not something that's going to happen right away. So is that the biggest mismatch, is this idea of like, when am I going to start to see results?
There is a mismatch there for sure. I mean, I think there's kind of a cultural element. You've got to think about some of these things take time. You can get quick results with key account management as well, but typically it means you've got to step up and invest. So, for example, one of the areas I look at sometimes, you see a key account manager and you say, well, how many customers are you looking after? And they go, well, 50. Well, you can't be doing a big saturation of effort across 50 customers. You haven't got a chance. If you're talking about building a plan and spending more time with the customer, doing more research. So there's kind of something where the organization has to give key account managers, once they've anointed and selected a customer, give the key account manager and the team a chance. I think a lot of companies just think, well, we've trained the key account managers, that's it, job done. Well, it needs the investment. And I also think as a change management program, companies need to get one or two customers working this way and then see what the results look like. Have a bit of patience, and then it will pay dividends. But it is a different way of working.
To what extent is it such a mindset shift? Like is the mindset of a key account manager, or for that matter, a strategic account manager, to what extent is their mindset and their whole approach to their work so substantially different from what you might just call general account management, or what what a lot of people think of as that it requires different ways of thinking, different frameworks, different mindsets, different levels of investment? And here's why I'm asking. I talk to a lot of post-sales leaders, customer growth leaders, and they say, oh, we have this segmentation of our customer base. This customer set gets X and this customer set gets Y and so on. But for the most part, it's not a fundamentally different way of working for a Cam or a Sam than it is for an account manager with 20 or 50 accounts. So to what extent is that contributing to the problem here, where we're not admitting that this is a totally different role? This is not just a senior version of an existing role. It's a complete reframe.
Yeah, you're right. It depends on the customer. There's multiple different flavors of key account. So some of the so if you've got a smaller key account in country, it probably isn't that different to a normal account. If you've got a customer that's spanning across multiple countries, and you're finding that more with just the way the markets are developing, then if you've got somebody trying to manage across multiple countries, it needs a different approach. And if you've got global customers, that's a different ball game again. But there are occasions when you have to step up. I think the principles are always the same. You've got to understand the customer. You've got to align your resources. You've got to build an offer for the customer. But it doesn't always have to be that complex model. It's building the right model for the opportunity and the needs that the customer presents. And
so, Mark, in your book, you wrote a book called Infinite Value, which came out in I think 2016. In that book and in your other work, so your work on that you post on your website and on LinkedIn, you talk about when a key account management program doesn't work, like we were just saying, not only do you as the company lose out, but the customer loses out as well, because the customer has certain sets of expectations around this and hoping to get results. And specifically, you use the language of value and of value leakage. Tell us what that is all about. Tell us what that is and how that might contribute to this conversation here.
Yeah, so you've constantly got this balance between value and price. So, buyers don't particularly want to talk about value necessarily. A buyer will want to pitch 2 or 3 suppliers together so they can get a discussion going about the price, because they're managing costs. Of course, the value you add to the customer should really dwarf what the price is, the cost that the customer's seeing. So you should emphasize the value that the customer is receiving. At the end of the day, customers, if you're speaking to the right people in the customer organization, they've got tough roles, they've got difficult environment. They just want to succeed at their strategy. So really, they're getting to the point where they need suppliers to be understanding their world and helping them to get their things done. They just want to get their strategies achieved. So it works both ways. I do think when you select recognize the potential of a customer as being key or strategic or whatever label you want to give it. Part of that, you should be recognizing that you're going to have to do, there's value opportunity there, either today or in the future, potential. There's value there, but you're going to have to do something different that you don't do with your non-key accounts. And that the way you express that to the customer is in the value proposition. So you recognize there's potential there. That's why you do this, of course. You're not a charity. Typically, you're not a charity. You recognize you're going to do that, but you want to make more money out of this customer. So how are you going to do that? You're going to have to do something different, and that's wrapped up in your value proposition. So one of the things I've found, and the work I do with Cranfield University, key account managers quite often struggle to be able to develop those unique value propositions for their customer.
All right, so tell me more about that. So I get the point. I get the point of that, but tell me more about what does that actually mean and look like when I'm developing a value proposition for a customer who's in a key accounts program. Are you talking about just my general value proposition of why to do business with me, or are you talking about a specific value proposition to be in the key account program, for example?
So I think you take a specific value proposition for that customer. I talk about value leakage and missed opportunity. That was one of the fundamental principles of infinite value. So I think when you look at a customer, there's huge potential value. Customers have got all sorts of things going on. I think as suppliers, you've got an opportunity to help them, and you can get more business from doing that. It starts to unravel when your understanding of that customer is too narrow. So if you're going into the customer thinking, well, I've got these things to sell, and that's your conversation, just simply around, I've got these things to sell, I'll talk to the people who want to buy those aspects. What you need to do is stand back and just think, well, and this is the cultural and mindset change, and just stand back and think, well, maybe I just need to understand the customer's world and just map out their strategy. I just need to think about the bigger picture. What are they trying to achieve? What is happening in their external environment? But there are levers you can pull. There are things a key account manager can do that makes their offer, the value add to the customer, more attractive. There are things they can do. Things like you could introduce them to different people. You could change the processes, the way they work. Sometimes there's things you can do with packaging and the way that the product is delivered, services, service level agreements. There's a lot of things you can do, and the way that you present it to the customer and the way you explain it that gives the key account, empowers the key account manager to develop those value propositions.
Sounds like a big part of this is solving bigger problems for the customer. So you show up and you've got your, whatever the arrows are in your quiver of things that you're selling, and you're trying to find people to buy those specific things. Or you could sit back and deeply understand the customer strategy. From there, uncover bigger opportunities that you can address, because almost everybody has more stuff they could be doing with a client, but that they aren't today because they're in a box, right? The customer puts you in a box and they only think of you for this one thing. So a big part of it is breaking out of that box, moving upstream and solving bigger problems.
Yeah, correct. Yeah. And I think if you probably need to speak to, the decision-making unit in the customer, you probably need to speak to more senior people because that's where value will be bigger.
Sure. Yeah.
And they won't want to talk to you about your nuts and bolt widgets that you're selling. They'll want to hear that you understand their business. They'll want market insights. They'll want to hear about probably, how's your offer going to hit their let's face it, the senior people in the business are probably looking at their profit on income statements, their balance sheet, and their cash flow.
And the stock price.
And the big issues and the risk they're exposed to. So if you can talk to them in that language, I like to use the expression different conversations with different people about different things, then you've got their ear. But to do that, you've got to put the spade work in to be able to have something to say to them.
So let's talk about that, because I think we have all lost count of the number of times that we were told, go talk to the C-suite, go sell to somebody higher in the organization, etc. Great.
Yeah.
The follow-up question is how? And so you just gave us some ideas of how to do that, but let's get even more specific. Like literally, how do I go about understanding who I should be talking to, what I should be talking to them about, doing the research, whatever it is. What are the steps involved there in actually getting an audience with a senior executive at a big company?
So first of all, you've got to have something to say to them. And I don't think you just burst into the C-suite. This is where you play the long game. So I think you need, where I've seen success in this is you get a sponsor on the customer side who will help you to understand what they're interested in. So somebody can help you and guide you on that. But I think you look at, if you want to get to that, a voice at the table of a senior leadership team, or not necessarily the board or senior leadership team, I think you need to maybe do some pilot studies with the customer, do some work for them, so you can take that to present it. It's almost like steps, so that you eventually get to change the conversation. It's it's classic sort of change management. If you look at the 8 steps, and Kotter's change management, and he talks about building small success stories. I think you look at that. So it could take you 1 or 2 years maybe to get to the big conversation, but you stick at it. If you've selected this customer as being key, then you invest the time to put the work in, to sort of actually they were really interested in. They wanted best practice from the automotive industry in manufacturing, which we had a ton of experience in. So, but that took time. It links in with trust as well. Trust. If you deliver what you promise, then trust will grow. And I think that builds through a series of little cycles. So if you can say to the customer you're going to do something, you deliver it, you tell them what you delivered, they've got the examples there, then over time that trust will build. But you can't just burst in and start a new conversation. Plus, I think you need to give yourself time to understand that. If you know the business and you put the investment in, you will have a much stronger conversation with the customer at the more senior level.
What's your process for selecting the right accounts for a key account program or a strategic account program? I have yet to see a standard definition of this. Everyone's always asking, how do you do it? I've not seen the kind of normal definition that everyone's uses, the standard, if you will. So how do you go about it?
So you use a mix of customer segmentation. There's multiple levels. The first level, you should really have an idea of the industries that you are serving, depending on your business. So I did this piece of work once for a law firm, actually. So we did some work with their leadership team to select, because they were serving all sectors. We said, you've got to have some sectors that are more attractive than others. They're specialised in, I think it was transport and pharmaceuticals, energy. So there's a few key sectors, and then they dropped off a few sectors as well. They'd spent a lot of time with agriculture, and they said, look, we can't, it's not big enough. So they kind of backed out of that. So once you know your target industries, you can bring that in to say, right, who are the players in those industries? Who are the companies that make up those industries? Well, then you have to look at it through 2 factors. You've got customer attractiveness factors, which is the customer is attractive to you, and you have a number of elements within that. So sales and profit will be there, and that's current or potential. So you can have a key account with zero business. Actually, it's totally prospect. That's fine, because all you're saying when you select a key account is you're saying, I'm going to put more effort into these customers. So you should have something there that says, it's going to be worth my while with sales and profit estimates. There's probably something in the attractiveness around the way they behave. So I like to call that buying behavior. So, for example, you don't necessarily want to put a lot of effort into trying to value sell to a customer that is very much focused on just very transactional. That's the way they are. Customers have a DNA. And then you probably want something in terms of their the strength of your relationship or trading history, and you put some kind of weighting factors against those things. So I've got, when I do segmentation with companies, I've got probably 20 or 30 different factors to share with companies. I would always suggest you have maybe no more than 5 mix of qualitative and quantitative factors with weighting, and you describe, what does a 10 look like and what does a 1 look like. Then the other side is you have critical success factors. So it's all very well. It's a bit like, not that I remember this, but it's like dating. Really, it's like saying, well, they've got to look at me the same way. So the critical success factors are, when you're looking at prospective customers, how are they going to look at you? So list those out. Try and estimate. When they're looking at you, what sort of factors those, and it's the same thing. A number of factors that you can score and weight it against. So you've got to build your segmentation model. So you've got to have some kind of consistency. I think the primary sort of sift is you squirt your 2,000-3,000 customers through, and probably just by sales and prospects, you narrow that down to maybe 200 or 100 customers. My experience as a consultant, it's wear your tin hat, because people get very emotional about their customers. If you're suddenly saying to them, actually, that customer you've been treating as a key customer all those years, it's no longer that.
It's a run-of-the-mill customer, and everyone gets all pissed off.
Exactly. Yeah. So, and you quite often find in companies they treat the key customers as the ones they like dealing with. So.
Well, that happens. That happens for sure. So what I've got from you here is, you said you've got about 30 different attributes that you can run through and decide on the ones that are gonna matter for any individual business. So when we're talking to someone who's listening to this podcast, it's cast a wide net in terms of what those attributes might be, but pay specific attention to the industries that you're strongest at. You want to go to your strengths, and so if you're really strong in logistics and healthcare, then your key accounts, it better be coming from there and not from some other industry that represents 5% of your revenue. So go to the heart of the business, and then within that, we're looking at how attractive is the customer. So what are the attributes of the customer? Could be something like revenue and profits, the behaviors that they're indicating, and then things like, what's the relationship like? Do we have C-level relationships? Do we have long-term relationships? Do we have multi-threaded relationships within there? All that's there. And then the second branch then is the success factors. Basically, are they willing to step up and act like a key account, just like we want them to be a key account? So do we have reciprocity in our relationship there? So is it a matching? Those are the considerations. I'll tell you right now, Mark, I know in terms of companies lower than $1 billion in revenue, almost nobody's doing this, right? This is not happening. This is probably happening in the upper echelons of the Fortune 500. Anybody else, I look at a CRO, chief customer officer, VP of account management, and everyone's like, I'm up to my eyeballs in day-to-day work. I have no time to spend 6 months designing my segmentation strategy for my customers here. So are there any shortcuts?
Yeah, well, I think there are shortcuts, but you can build a model fairly quickly. I think the trouble when you miss that step out, though, when you haven't put a bit of science into segmentation, and in my opinion, it's the keystone of any good customer management strategy. When you don't do that, you end up overserving customers that don't warrant it and underserving customers that do warrant it. So your whole approach to customer strategy is right on the back foot. So, and with some companies as well, they haven't got. So you've got marketing and you've got sales. I used to work in a function called customer management. It was essentially a center of excellence for how you build your channels. Again, there's a lot of companies don't do that, but at a minimum, I would suggest do your segmentation and build a strategy around, because then there's the so what. So I've anointed these customers as key global. So what are you going to do now then? Right. How are you going to? And that can be one page, and your segmentation model can be one page. So you can shortcut it. You can, but making those decisions does take a bit of time. It doesn't have to be overly complex. I think if you're segmenting purely by sales, you're missing a big trick, because there's no consideration of future potential. It's very static. You're just looking at what happened last year, probably.
And you don't know their posture and their positioning. You don't know how they're going to respond to you, because some people, like you were saying, they want to be transactional. Like Walmart is a famous case of just always wanting to be transactional, for example. Everybody wants them as a key account, and Walmart just makes everyone compete on price.
Although, when I was in Castrol, Walmart would have been Castrol was the BP lubricants brand. It was probably one of our first or second customer, mainly because North America. But we found if you treat Walmart properly, and they've got like 20 or 30 different things they want you to do. But we had a very good relationship with them, and it was good business. It was good volume, and it wasn't bad margin. So, yeah.
So let's move on to the what do you do next? So great, we understand the selection criteria. We've got these accounts that are out there. We understand why we're doing it. Then we get into what do we do with these customers? So how do we approach them differently? You talk about value-based key account management. There's just different ways that we need to be interacting with and engaging with these customers. That's quite distinct from how we're doing it with our other accounts.
Yeah. So I talk about three things with key account management. So I think the most important thing is to get your offer right with the customer. So you've selected your key customer, and we've already talked about the value proposition. So that's the most important thing, because that's what the customer buys. So if you've got your offer wrong, they're not going to buy it, or they're going to buy it at a discount, and it's you're back to the price wars. So that's one thing. So having a process a model that helps the key account manager and the business can follow to build and deliver strong offers. That's the most important thing, and it's leadership without authority, actually, without formal authority. And then the hardest thing, which we've sort of talked about, and I think this is where a lot of CAM programs do struggle, is the leadership setting the right culture and framework of the business to allow the key account managers to do a good job.
And so what does that part look like, the leadership part?
So I think they need, back to your segmentation piece, they should put a bit of time into doing the segmentation. They should put a bit of time into saying, well, okay, this is what it's going to look like over the next 18 months, 2 years, to build some kind of program. And as a sort of my top tip with leadership, as I would say, don't try and boil the ocean here. Pick 2 or 3 customers, pick one customer, and throw the kitchen sink at that and see what happens. Build your own case study, but put some effort in and give the team working on that customer, give them some support over the next 6-12 months or whatever, and see what happens. And if it produces results that you think actually we'd really like to replicate that across the wider business, something this works, then give them the support, listen to them. You'd be surprised how many companies, they're not listening regularly about their key customers, where potentially all this business, 80% of your business can come from your top 20 customers, but the dialogue between leadership and the key account managers is broken. So at least open up the dialogue, but get these pilot studies going, and then build your own capability. And I do think each customer needs to build their business. There's no set pathway. The company's suppliers will be doing some things really well, but there'll be other areas where there'll be some gaps. So leadership just need to say, this is what we're going to do. If I look at the companies where they've done a good job with key account management, that would be the overarching factor is, they stick at it. They make mistakes. Things don't go quite to plan, but over time, they just stick at it because leadership has said it's a way we're going to do business, and we're going to, regardless what happens, this is going to be, it's one of our top 4 or 5 strategic initiatives as the way we do business.
Who are the companies out there that we should all be looking up to in terms of key account management? Like who should be famous or more famous in this area? Like who should we be referencing?
Good question. So I'll tell you, in terms of sectors, I think some of the consumer packaged goods companies are doing a good job of this because they have to. Imagine you've got Walmart as a customer, you've got to do good key account management. But it's quite a unique approach to key account management that they have to adopt that doesn't always fit other industries. So if you're selling to Walmart or Tesco's in the UK, you've got to be going to them with they've got a very, very strong understanding of the category and the consumer.
Yeah, retail always operates slightly different than everybody else, I find.
Yeah, some of the we've seen some of the engineering groups. So I'm doing some work with Siemens at the moment. So they do quite a good job. We hold them up in good light, and you can see they've got characters within that business where they've really spent some time getting to understand the business and implementing it. The old business I was in, Castrol, they were doing some good work in this as well. Across BP, they were doing some good work. But it was typically you look at it and you find that they're doing something. Much as we'd have a centralized approach, the way it was becoming successful was for them to tailor it in for that market they're serving and their customers. So that's the secret: is build it for your business and your customers.
You got any examples of mid-tier companies or smaller companies that are doing this?
I worked with a recruitment company, a local UK company, a while ago, and I thought it was going to be a challenge, but they got a lot of younger recruitment. They're recruiting into the pharmaceutical industry, and I was amazed actually how well they took it on board. They used the processes very quickly. They were very open-minded about it. I think one of the areas there is because it was a smaller size company, their leadership team really wanted to make it work. So they were all there alongside. That made a big difference. Some of the law firms I've worked with, I think when you've got a bit of a burning platform, it, as with any change, that sort of drives the willingness of the company to invest and lean into it.
Like, what's an example of a burning platform in that sense?
So the law firms I work with, so they were coming out of the recession. There's a good paper on this, actually. one of the law firms wrote, but UK law firms said, after the recession, it sort of accelerated change for them, in terms of customers were pushing back on accepting high fees. Customers were bringing legal advice in-house. They were starting to bring in panels to sort of really play off one law firm against. So they weren't able to differentiate as much as they had in the past. So some of there was a good paper which was talking about the law firm of the 21st century, the client revolution. And they were saying, maybe we can differentiate by understanding the client and doing something that they want instead of just sitting back. So it's a very good paper. One of these law firms sort of stood back and said, the whole industry needs to change. I'll send you a copy of the paper, actually. And that's what they did. They brought things in. They set up a client advisory board. So they said, we know that this industry has to change, our industry. We'd like you to tell us what you want. So they're people from like Barclays and they're big customers, non-competing customers, but bank. They had a big electronics firm. They had a big hotel group, senior people, and they used to meet up. And they just said, look, let's just talk about the industry. You tell us what you want us to be. And they've adapted and changed. And from that, I've sort of looked at that industry and seen it change. It's almost like the industry started to change that way. And if companies that didn't adapt to that were either snapped up by other competitors or struggle.
So, Mark, on that point, you've been at Cranfield University, and this is one of the very rare universities that actually has account management programs. And one of the things that I always say is there's no such thing as an MBA in account management. Well, I guess in this case there is at Cranfield. But what I want to know is, when you look at the companies that get key account management right versus the ones that don't, what are the benefits? What should I be seeing in my business in terms of profitability, growth, durability, employee satisfaction, employee morale, stock price results, whatever it is? Like, what's the payoff here for getting it right?
That's a good question. I mean, I don't, and again, it depends on the company. So, if you've got so some companies have to do it. If if you're suddenly looking at your portfolio and you've got a saturation of business in a smaller and smaller footprint, you've got to do this. Otherwise, you lose one of those customers.
So if you're in a highly concentrated market, or if your customers are just like really lopsided in terms of the revenue they're giving you.
And that's typically happening. If you look at a lot of growth in industries, growth comes by acquisition. So any market tends to saturate that way. So whether you're looking at it to grow or not, you've just got to step up to these bigger customers. They demand it. So there's the first stage is sort of survival. In terms of statistics for, if you do this, you'll get this growth.
I mean, the assumption here behind the economics is that if I invest in these type of programs, it will reduce my cost to serve the customer. So I spend a lot of money to acquire the customer. Cost of service goes down. The longer they stick around, the more profitable they are. And the longer they stick around, the more durable the business is in the eyes of outside investors, because it's more predictable. And all that typically will translate into higher multiples, right? So I get a higher multiple on my revenue and my profits because I have a more predictable and durable business. That's the general idea here. So when you look at the fact that new customers are generally unprofitable, okay, fine, everybody understands that. As long as we get them to the payback period, then they become profitable after that. The longer we keep them, the more profitable they're going to get over time. There might be some ups and downs based on level of service or what have you. But generally speaking, that's the game here. And I think that when you do it at a key account scale, then you get different set of economies of scale, because you've got further concentrated revenue. So if you grow if you grow that one customer that represents 10% of your revenue, you grow them by 20%. That's an extra 2% of revenue. Boom, right there.
Yeah.
And so you have some benefits to that. So that's my impression of how all this works. So I think anecdotally it's there. I was just curious if you had any like real numbers that show that the people who get better valuations and better outcomes, et cetera, they all have these characteristics of great account management programs. But it sounds like we don't have that data today.
I don't. There probably is some data out there. I can fish around for it, but I do know that you have to things change on both sides of the relationship.
Now, I want to come back to the 3 points, that you were making here, and just kind of wrap up with this concept of this question, which is, let's say I'm a key account manager and I want my executive team to pay more attention to what I'm doing. I want to get more resources. I want to have a bigger program. I think there's a lot here. And we talked about the offer, so having a strong offer for the customer. We talked about the key account manager themselves being the most important person in the room, if you will. But then you said leadership and making sure the leadership is bought into what we're doing and sets the tone for the company is most important. So how do I, as an individual account manager, bring up this topic with my senior execs, get their buy-in, enroll them in the future that I want, and get the resources that I'm looking for?
So I call it the internal pitch. And you've got to think about, well, what do leaders want to hear? They want to hear about, well, is it big enough? Is it material? They don't want to hear about small bits of extra sales. So bring me some big ideas. They want to know about, is the margin there? Is it profitable? And then the other thing probably is momentum. I was listening to a senior leader of a pharmaceutical company once, and he was saying, people pitch ideas to me all the time, and I want to hear about, has it got the 3 M's? Has it got margin? These ideas, is it material? So is it big enough? Is it profitable? And has it got momentum? Is it going to keep going? He said, quite often I get pitched ideas that are not very big, not very profitable, and they probably work for 6 months. So I think it's kind of put yourself in the mind of leaders to say to them, this is what the future, this is what it could look like. But so dangle the carrot. This is what the future looks like with this customer. But I need some investment. And maybe you give them 3 scenarios. Maybe you give them a scenario of invest heavily, we'll get this with this customer. Strategy customer by customer. Maybe you say as is, we carry on as we are. And then the other scenario might be, well, maybe we invest less. But at least give the leadership an idea of information so they can make the decision to support them. Tell them what you need. That quite often is missing. So that internal loop around, yes, you've got to pitch to the customer. It's one of the things we say with key account managers is they probably spend 60 to 70% of their time in their own organization.
Yeah, we all know that one. Yeah, we all know that one.
Yeah.
Well, so this is great. So if you're listening to this podcast and you hear Mark talking and you say, boy, I need more juice in my key account management program, go pitch them on margin, making a material impact, and having momentum, and be very specific about your request. That's the recipe here.
Backed up with a good customer plan. Yeah.
There you go. Awesome. Well, Mark Davies, a pleasure having you on. Thanks so much for sharing today.
Thank you. Thanks, Alex.